Hello and welcome to a live episode.
And I'm Joe Weisenthal. We're very excited to be doing this. We had a live event last year, the Odd Lots Variety Show. We had music, live guests, live audience, but obviously things just a little bit different since then.
Yeah, just a little bit. So I guess 2020 has happened since then. Obviously, we don't have time to list everything that's and big. And now if you look at the S&P 500, we're back above the 3,000 point level and almost back to where we were before March, I think.
This is the really crazy part. Like after today, we're essentially flat. And, there was like a point, it's like we've had the biggest economic disruption essentially in history. And this is normally the time where bearish bets, et cetera, are supposed to shine. You get the biggest economic crisis in history. Not only are markets essentially flat on the year, but a lot of the most expensive stocks that we had seen going into the crisis are actually higher.
Yeah, and that's exactly something that we're going to get into today. If you're a bear or a short seller, how do you actually feel about this market? Do you see targets everywhere just because the economic situation is so bad? Or do you sort of throw up your hands and just give up at this point because everything is getting bailed out and thrown a massive liquidity lifeline?
Right. So there have been a few high-profile short seller successes this year. Wirecard, alleged massive fraud that people have been talking about for a long time, finally coming to light. But you have other companies that were very heavily targeted by shorts. Lots of people claiming that there's problems. A company like Tesla comes to mind, and the shorts have been obliterated this year. So it's not worked out like many would have expected a massive downturn to work out at all.
Yeah, and we are, of course, going to get into all of that with our very special guest for the hour. Before we do that, I just have one housekeeping note, which is that we are obviously doing this live, and you can submit questions as we're doing this by tweeting them at the Twitter handle podcasts. You can also just tweet them to myself or Joe on Twitter. So please do that. Let us know your questions, and we'll try to get them to Carson as we go along.
All right, so without further ado, let's bring in our guest. It's Carson Block, founder of Muddy Waters Research. He's a well-known short seller looking for frauds and other overvalued companies. Carson, welcome to the Odd Lots live episode.
Yeah, thanks. It's good to be here, albeit under strange circumstances.
So it is kind of weird, right, that we have this just extraordinary economic disruption, where depression levels economic activity around the world. Normally, this is when, a portfolio that has a big short book, this is when it would shine and balance out the risks. Not a great year, at least from a traditional metric. We can get into individual companies, but not a great, maybe many of them haven't done what people would have expected.
No, that's the old paradigm. The new paradigm is that the worse the world is doing, the better equities and financial assets will do. Of course, that's clearly that's.
So we're so old-fashioned with our expectation that there would be a nice, clean relationship between the economy and the stock market.
Yeah, no, that's. I used to believe that too, but in the past few months, I'm learning that that's not the case. Yeah, I mean, these are incredibly strange times. And just from a market's perspective, I look around and what I keep thinking to myself is Rome is burning and Nero is fiddling. And, I really think that the explosion of protests that we saw on the streets in the US and then overseas, the way that I think about this is inequality is really the powder keg, COVID the accelerant, and George Floyd was the spark. To the extent I'm correct, and it's really about inequality, I mean, when you look at people losing their jobs, businesses closing, and market's ripping, I mean, yeah, we're setting ourselves up for some just next level inequality, which I thought we were already there beforehand.
Hmm. The notion of rising inequality, to some extent, it seems difficult to trade on that.
Yeah, sorry, Tracy, the first part cut out. Would you say that again, please?
Sure. I was just asking, how does that idea translate into your actual investment strategy at this point?
Oh man, I'm trying to figure that out, right? I mean, we're not typical for short sellers because we're activist short sellers. So pretty much everything that goes into the book has a component of us speaking publicly about it, or somebody else who's an activist speaking publicly about it. So we're continuing to do what we do. Now, we've been running our book mostly market neutral for a couple of years. And the way that we've been doing the long side is we try to hedge the long side with factors. And right now the factors aren't really matching up. They're hedging out some of the beta, but not all of it. So it's, I think this is a temporary state of things. I do expect at some point economic reality to catch up with markets, but even if they don't, I think we're just in this really funky period for maybe a few months. So, in terms of adjustments, look, I think the thing to do is whatever your investing style, keep doing what you do. And if it's been successful for you in other markets, that's a lot better than the alternative of trying to match your style to the moment, because that's almost always guaranteed to be a failure.
Let's talk a little bit about your approach. You're known for sort of sniffing out accounting frauds. How did you talk a little bit about your background? Like, how did you learn to identify them? What is your sort of basic process for having these come across your radar and discovering the companies that you think are in some way, whether it's straight up fraud or just aggressive accounting, but within the principles leading to overvaluation? How do you start sifting through the names and finding them?
Okay, so to how I got here, and it's a little circuitous, so I will do my best to nutshell this. But I grew up in the markets. My father was an equity analyst, so when I was young, I kind of started learning it a little bit. And I really wanted to be an investor. And so after USC, I graduated in 98, spent a little bit of time in China looking to open. But what was happening was we were getting lied to by a parade of managements at the time. So they were using us, basically get our institutional clients buying the stock, and then managements were dumping into it, and these companies would blow up. And one of the companies was actually subsequently adjudicated to be a fraud. So where that at the same time this was happening, the largest companies in the world, Enron, WorldCom, Health South, etc., they were blowing up as frauds as well. And I have to say, I was pretty embittered. So by 2002, I was 26 years old, and I wanted to be an investor, but I just felt like I couldn't trust management. So I decided to go to law school thinking that I would find some tools to put in my toolbox that would help me be a better investor. And I had no intention of practicing law. I just figured I'm there to, take contracts, securities, a few other things. started law school, and I really, really enjoyed it. And so I made the decision that I would actually practice law for a little while after I graduated, and that would also make me a better investor. So that's what I did. When I graduated from law school in '05, I had a job offer from a big firm in the US, and I had one from a big firm in China. And I decided to do China because since I never wanted to be a lawyer anyway, I thought that I would see more interesting things in China and that I would have more responsibilities. So I did that, and I didn't do it very long. I saw opportunities to do something entrepreneurial. So after close to a year and a half, I left. I set up the first self-storage business in mainland China, and I thought, we're going to raise money, be huge, go public, rising middle class. How can we miss? And that's when I really, really started to learn the skills that I needed to do what I do now. And at the same time, I was chairman of the American Chamber of Commerce's Shanghai Entrepreneurs Committee. So most of my friends were foreign entrepreneurs. And through my own experiences and through theirs, I just absorbed and learned how just how easily perceptions could be manipulated. I mean, fraud is everywhere in China. And, when you talk to Chinese business people, they do the most basic due diligence. It's kind of like I was used to talking to Western business people, and they come in and they ask questions, about, well, what do the cash flow, where did that come from? But in China, it's really basic. It's like, how do I know you own this factory? How do I know these workers are really your workers? And at first, that's kind of a trip, as a Westerner to hear people asking these fundamental questions. But it really turns out to be the cornerstone of investing in anything in China or any other emerging market. So in my self-storage business and through others, I learned a lot of hard lessons. And I was barely keeping my self-storage business afloat. The place where we had set it up turns out that it was a huge fraud, and so I had to go to war with the guy who controlled that development in order to keep from going under. And yeah, I guess at that time I just started seeing the matrix. So in late 2009, my father got really excited about some of these Chinese companies that had listed in the US through reverse merger. He asked me to take a look at one. I really didn't want to. And at that point, I had assumed that the auditors performed an anti-fraud function. I mean, I'd lost faith in everybody else, right? The managements, the boards, the lawyers, the bankers. But auditors, I thought, perform anti-fraud function. So the first company I'd look at would, for my father, disabuse me of that notion. And it was a company called Orient Paper. And it had just reported for 2009, $103 million US in revenue. The real revenue number was about 2.5 to 3 million. And it was such an obvious, blatant fraud when we went to visit it. It was amazing to me that other investors who had actually bought stock in it had gone to that factory and were just totally bamboozled because it just wasn't even a close call. So, not having a business plan, and my father wasn't interested in shorting. I just put together this 30-something page report as a side project over several months, explaining Orient Paper is a fraud. They've raised blah $1 million. They've stolen it. And I sent it out to the ether to 50 people in the markets with whom I'd last spoken 9 or 10 years earlier. The report went viral, and here I am today.
This kind of brings me to something I wanted to ask, which is, how difficult is the short selling business model? Because you can be right on a company for a really long time, but you still have to fund that position. And in the meantime, you're often fighting legal battles, expensive legal battles, things like that. How tough is it?
So this is where you have to distinguish what we do from what a traditional short seller does, because traditional short sellers, they'll short the stock and they don't talk about it. And the vast majority of shorts that a traditional short seller will put on are usually fundamentals based, melting ice cubes. What we do as activist short sellers, we focus on, in the way I put it is, we're backward looking. So we're really asking three questions when we look at a company. Is the material or is the information the company has put out into the marketplace, is that largely accurate? Or the corollary question is, has it been misrepresented or invented? Number one. Number two, has the company omitted any material information? So those are lies of omission versus the first are lies of commission. And the final question is, are investors understanding the information correctly? And so when we have a problem with one of those answers, then there's something for us to do. So the crux of what we do is not to say, okay, we're short this company because we think that over the next 2 years, competition is going to come in and erode margins. I mean, we've done a little bit of that, but that's not really middle of the fairway for us. We usually say, okay, this is what the company told you about the past. This is what the problems are with what they've told you. And this is what they haven't told you. And you know what, market? You make your decision from here on out. So, people ask me all the time, well, what's the valuation you put on this? And I mean, there are two issues with that. Number one, we can't often tell what, really 100% what's going on inside a company. I mean, if it's a total fraud, we can usually see that it's a total fraud. If they're, and we're usually, we say, look, the net income was goosed by 40% at least. Maybe it was goosed by 70. I have no idea. But, we can establish kind of minimum thresholds of manipulation or fraud. But I can't put a valuation on that. And I think it's an intellectually disingenuous exercise to do it anyway, because to me, the answer is, look, they're lying to you. Who cares what you think it's worth? Like, get out. I mean, I firmly believe in that old axiom, fool me once, shame on you, fool me twice, shame on me. So let's not kind of figure out just how bad this is. I mean, that's my philosophy on that. The other thing is, I don't, and this kind of gets to the opening portion here where we were talking about how ludicrous really valuations are at this moment. If you're asking me to project what I think the market will value this company at, I don't want to play that game. I really like what I do from the perspective of, we're not trying to take out a crystal ball and pretend we have a real edge on seeing the future. So we lay it out, investors can play it out. If they think that the information we put out is meaningful and it changes their minds, they sell the stock, great. If they don't, well, that's tough for us. But I just don't get into this game of guessing, what a stock is worth.
Carson, you mentioned early on, 2009, all of those Chinese reverse mergers. I remember that wave, and there was a lot of sort of reports put out by eventually yourself and people like yourself. It's like, this company doesn't really exist, or is not nearly what it claims to be. But before we talk about that a little bit more, we're seeing right now another wave of reverse mergers. Every day there's some new SPAC that's coming on to the market. It's like, oh, we're going to buy an electric car startup or whatever it is. Does that tell you anything? Is that a sign when there is a reverse merger wave, when this sort of financing vehicle becomes super popular all of a sudden?
Yeah, I mean, I can't say that it's a good sign for efficient allocation of capital. I mean, it seems pretty speculative. And then in some of my more detached moments, I think, why don't I have a SPAC?
I've had the same thought.
Yeah, exactly. But I was discussing one particular SPAC yesterday, and I made the joke. I was like, well, I think that the old axiom should be slightly rewritten to say, if you want a friend, buy a SPAC. The implication there being that they're buying dogs. But anyway, it was more apparent, I guess, in the context of our conversation that I was having. but yeah, I don't know. Everybody is just reaching for returns. You've once again with with financial repression and yields being depressed. Now you've got this rotation, by all these pension funds and insurance companies. They got to buy equities. I mean, this is just I don't know. These are just very depressing times for, I think, a purist when it comes to asset valuation, which is kind of how I view myself, or a purist, at least in terms of trying to get fundamentals of a business to match the actual price of the securities.
Yeah. So setting aside valuations for a second, in the current environment then, do you go after frauds that potentially will come to light as the economic fundamentals get worse? Or do you go after companies whose business models just no longer work in the post-COVID environment?
Yeah, I'm not really one for the terminal business model short. Look, there are exceptions. Occasionally something does make so much sense to us in terms of it being a terminal business model thesis, but that's pretty rare. I mean, most of what we do, and there are other activist short sellers who probably don't have exactly the same approach, but I'd say most of what we do is actually legal financial statement manipulation. Because fraud is, I've said for a number of years, like fraud is actually kind of for stupid people when you think about it. Because so many businesses have so much latitude in the accounting standards that you can play with those standards in a way where, unless you sent one of the dumbest emails of your life, you're not actually going to incur legal liability for how you present your financials. And a great example of that is a company that we shorted in early April, eHealth, which not doing anything illegal as far as we can tell, but there's this relatively new accounting standard, ASC 606, and I think it's really enabled them, their adoption of ASC 606 has really enabled them to turn the company into a stock promotion that is incinerating cash and going to hit the wall at some point. So that's most of what we do, is the legal fraud category. Then there's from a legal perspective, the real fraud category. And a lot of those that we do are China-based companies, because the information asymmetries really allow that to flourish. The fact that there hasn't been enforcement in that space in years also allows that to flourish. So most of our fraud shorting is China, although occasionally we'll do something that's non-China related, where it is a fraud short.
Could explain to us a little bit more, like coming from a U.S. perspective, the idea that a company, that the numbers are just not a little bit fudged, but massively fudged, that, as you say, due diligence might be in China. Like, is this really your factory? Do these employees really work for you? Like, obviously, from sort of a U.S. investor perspective, U.S. listed stocks, those are almost questions that probably never get asked ever. Just for the sort of for the audience that maybe not as familiar with Chinese listing standards, what are the standards? What are the expectations? And why, in your view, are companies like this able to flourish?
Okay, so I'll first tell a little anecdote and then I'll get into a more detailed answer there. With one of the companies that we'd shorted in the early days, a China-based company, the person who chaired the audit committee was somebody who actually had a decent reputation. And I had a friend who was also friends with the chair of that audit committee. And I remember talking to my friend one time, and I said, I just don't get this. Like, why won't this guy has a good reputation. Why won't he resign from the board here? And he said, look, I had a candid conversation with him. I asked him that question, and his answer was, the company might be a fraud, but the paperwork is perfect. Now, that is really what you have to understand about what financials are built upon and what auditors actually do. So number one, auditors do not prepare financial statements. Management prepares financial statements. So if you have fraud that's carried out by top management, right, the financial statements will be the product of that fraud. So what are auditors supposed to do? What is their role in detecting fraud? That's what a lot of people don't understand. Auditors just look for paperwork. Okay, is there a sales contract in place? Yes, check. Okay, do I see an invoice issued to support this transaction under that contract? Yes, check. Okay, did you receive an email saying that the money was sent? Yes, check. All right, that's what you need generally to convince an auditor that the accounts are free of fraud. Now, there's one exception. The only real fraud assurance procedure that an auditor generally undertakes is a cash confirmation. So here's the problem. The auditor is given bank statements, which can easily be forged. And so the auditor the auditor then sends a confirmation letter to the bank. And, are these, is this the balance? Are these genuine? Now, a US-based fraud brokerage firm back in the early part of last decade, PF Best, or Peregrine Financial, the guy who pulled that one off, Russell Weisenthal, I mean, he pulled it off by taking out a post office box, giving his auditors that PO box and saying, oh, that's the PO box for US banks auditor confirmations. And then he controlled the PO box. He'd get the confirmation letter. He'd just fill it out and send it back and say that that everything was confirmed, that it was correct. So auditors in China, though, after 2011 or 12, they got a little smarter. And one of the keys to understand in China is that the branch employees, or at least the branch manager and sometimes vice manager, were often in on it. They were bought off. To them, a lot of money is a few $1,000s or maybe $20,000. And if you're raising and stealing tens of millions of dollars, that's, pocket lint. So you can pay these people off. And so the branch managers would say, oh, yeah, that's correct. And they might print out a screen that supposedly shows the balance and hand it to the auditor. Well, the auditors realized, though, that the branch managers were in on it, and other branch employees too. So then they started getting smart, and they would go to the bank and they would hand a teller a small amount of money, a few RMB, and say, yeah, please deposit this into this account. And then later they would go for the confirmation, and they'd want to actually see a statement that shows that deposit in the account. And if they didn't, they'd know that they were dealing with forged bank statement. So then companies adjusted. What did they do? They said, oh, you know what? We're not leaving the money in the bank. We're putting this money on deposit in these great wealth management products because these WMPs, they yield so much. And, well, yeah, like you can't run that test, but here are the paper certificates from the bank. If you want to confirm it, go talk to the branch manager. Which, once again, it's the guy I bribed, so he's going to say whatever I tell him to say. So that's how these companies got back in front of it. Now, if you really, to take things up to a 30,000 foot level, here's the core problem when you're dealing with a company in China or a company in the United Arab Emirates, which we had one of those erased this year from last year for being a fraud. The issue is that our judicial systems, our court systems, do not recognize each other's judgments. Now, that's generally a good thing because China has a fake court system. And, the UAE's probably isn't much better either. But, so it's good that we don't want to recognize judgments from a fake court system where the winner of a case is basically the one who was able to go and bribe the judge. But they will not recognize our court system's judgments either. So effectively, all of these people who are in China or in one of these countries are beyond the reach of US law. So if I wanted to run a fraud like this in the US, and I went to some of my high school friends, and I said, hey, Anthony, listen, why don't you set up an entity, get a bank account, let's create a bunch of forged paperwork, let's pretend I'm selling you stuff, and then, Mike, you do something also like that, but you're going to be my supplier. All right, we wouldn't get away with it. Anthony and Mike would say no, because when you go down, we're going to go down too. Well, if I were in China, nobody would be afraid of that because they can't be touched. And that's the fundamental problem here, is that there's no recourse. There's generally no recourse to the chairman of the company, the controlling shareholder who set the whole thing up. And there's never recourse to his friends from school who helped him, or his in-laws, or whoever it is who helped set up these fake companies to enter into these sham transactions. So it's basically, it's for them, it's heads I win, tails I don't lose. I mean, if you're sitting in China and you're thinking, hey, maybe I should launch a company, and it'd be great if it's real, but it probably won't be real. But why don't I just lie about the numbers, take it public in the US, and if this works, I'm going to be incredibly wealthy. You really have no downside. You have everything to gain, nothing to lose.
Since we're on the topic of China's legal system, I wanted to ask you as well about the new national security law in Hong Kong. So we've talked before about how you've basically written off the possibility that you'll ever be able to go back to China. I'm wondering, with the new national security legislation, is that going to change the way you feel about coming to Hong Kong? Because you've visited here before. I think you've been to conferences and things like that. Would you still feel comfortable coming back?
That's a tough question to answer. I don't know. I mean, my issue. So when I've thought about mainland China in the past, I've said I don't think they'd give me a visa. But if they did give me a visa, I'd actually be a little worried. And my concern with going to mainland China has been that I think I would enter the country. As soon as I enter, one or more companies would file suit in China for billions of US dollars in total. And because I'm a foreigner, they would then place an exit control on my passport that would prohibit me from leaving the country until these cases have run their course. And again, I'm not going to be the person to be able to bribe the judge. It'll be the company. So I'm going to, lose these cases. So that's why I've stayed out of mainland China. Does this extend to Hong Kong? Looks like it could. I mean, it all appears to be at the discretion of the PRC government, of the mainland government. So I don't know what their game is here, like how far they want to go. I mean, obviously they see the pandemic as an opportunity to cram this law down in Hong Kong, something they weren't able to do for years. I mean, they've been trying, I think, since 2001 to put something like this in place, and they always met resistance. So the CCP has said, all right, pandemic, great time. Everybody else in the world is distracted by this, so we can get away with it. Now, the other thing here is, I think they also did that because they said, okay, Hong Kong used to be important to us economically and for other reasons, and it was, a problem. But what really was more important to us was its economic importance. That's no longer the case. I mean, Hong Kong is relatively immaterial for China at this point in time. So I think they said, okay, the nuisance factor of Hong Kong outweighs its value to us, so we're going to crack down. Now, to what extent does that thinking extend to investors, foreign investors who could be traveling to Hong Kong or be living and working in Hong Kong? We have yet to see how far the CCP wants to go with it. But that's basically the way that the CCP runs China. It's rule by law, not rule of law. Within mainland China, almost every law and regulation is so vague that somebody has the discretion to use it against you and put you down if that's what they want to do. So it ultimately becomes about politics as to whether you're allowed to live, breathe, do business, etc. in Hong Kong, in mainland China. How far will they go in HK? I just don't know at this point.
Yeah, it might deprive you of investing opportunities, but should regulators in the U.S. crackdown on Chinese listings. I believe you were short Luckin, the coffee chain. That stock completely collapsed. People just came out that the revenue was massively inflated. Is there should regulators here do more to protect U.S. based investors from Chinese listings?
Okay, so let me be clear. Number one, effectively having all these frauds in the US from China has been good for me financially. That said, there's no way these things should be allowed to list here. I mean, I cannot think, I know of no parallel in history where you had one country where repeatedly they, systematically defrauded citizens of another country through hundreds and hundreds of frauds, and all again without recourse. I mean, I've felt for quite some time that from the CCP's perspective, that China has launched an undeclared financial or economic war against the West, in particular the US. And there are a lot of fronts here. Capital markets is one front. And there are several things that China is doing within the capital markets. But the most brazen is creating these conditions for PRC-based fraudsters without recourse to steal money from US investors. So given that literally hundreds of these things have been accepted to have been frauds, we should not be letting those companies list here. Now, instead of trying to be more conciliatory or be taken more seriously in this matter, what the Chinese government has instead enacted or it revised its securities law, which went into effect this year. What was an unwritten law before, supposedly part of state secrets, that nobody could talk to a U.S. investigator, looking into financial fraud because that might be a state secret. Now it's actually been codified. So new Article 177 in the revised securities law of the People's Republic of China expressly provides that no PRC-based person or entity may cooperate with a foreign regulator investigating potential securities regulations without first getting permission from the China Securities Regulatory Commission to provide such cooperation. So that is as defiant a stand as I could ever imagine a government taking in this situation. And yet we lie down for this. And I was part of this SEC roundtable last week, and of course somebody from NYSE and somebody from NASDAQ, were part of the parade. I mean, I'm glad that I did get a chance to to represent the other side here, but you have all of these people in the markets who it's in their short-term interests to keep these listings here, but it's not in the interests of retail investors. So the banks make their money off the transactions and, off bringing these companies public and raising subsequent rounds for them. The private banks make money off lending to the principals. Hedge funds, they know these things are frauds. They don't care. As long as it's going to go up because we've got crazy liquidity conditions, then sure, let's go long. Mutual funds just want to package and sell financial products. So it's like, hey, great, this is one more dream we can sell people. China's growing really fast. Get into our China funds. The index providers, MSCI basically got its arm twisted into upping the allocation to PRC-based issuos. MSCI, there's not a single patriot in senior management there, if you ask me. But who gets screwed? It's the retail investors who ultimately get screwed by this because everybody else is in on the joke. Oh, and the exchanges, which are for-profit companies, and and quarter-to-quarter earnings are important. They're there pandering for the business, and and telling the SEC that maybe we could put like a little symbol next to a company from China that like one of those turd emojis. I mean, that's what they should put, but even that wouldn't solve the problem. These companies should not be allowed to raise money nor have liquid securities markets here in the United States.
I want to make sure that we take some questions from our viewers as well. So I'm going to go ahead and choose one. The conservative investor asked, what criteria would you use to go long a stock? And I'll just add on to that. Do you have any long positions at the moment?
Yeah, it's pretty rare that we're directionally long something. I mean, we'll generally be long something as a hedge. We do have a directionally long position. It's actually in a junior gold miner where we've done a lot of due diligence, and so I mean, look, it's I'm not telling you it's a sure thing, but the asymmetry was there. So on the long side, if we look at something where we think there's real asymmetry in terms of the upside downside, that would be interesting to us. But in general, I mean, everybody in the world is looking for longs. It's just for you to find something that nobody else has really found is I think kind of presumptuous, or at least that's how I think about it. So I just feel like that's a much more crowded space to try to distinguish oneself, and we generally don't have that edge on the long side. Now, there could be exceptions to that. I mean, we're very good in environments where things are quite opaque. We're very good in emerging and frontier markets, but we're good at answering the questions about, is this company real? Are the numbers real? How much can we trust the people who are running it? I'm not going to pretend to be the kind of person who can, look into the future and say, these guys, they've really hit it with this. This is going to be huge. I'm not a futurist.
Here's a question, and probably a lot of people wondering. It's from a Twitter user, Contrarian Short. But probably a lot of people wondering, do you have a view on Tesla? I mean, this is this company that a lot of people are extremely skeptical of from just from a valuation perspective. Obviously, people are skeptical of it from an operations standpoint. And there are a lot of people that for years have tried to poke holes in its accounting or accuse the company of aggressive accounting at a minimum. I'm just curious, what your thoughts on it. Have you ever had a position one way or another in it? But beyond that, what do you make? And it's just an extraordinary story this year, especially.
Sure. So at one time we had a position where we went long the credit. So they had some converts. We went long the converts, and we used the coupon payments to fund long dated, deep out of the money puts. So basically a crash put position. We ended up selling the credit when we got uncomfortable with it. And this was before they did their raise, I think in 18. Right. And then we just let the puts burn off. And last summer, I mean, we were getting a little bit excited about the puts, but then things changed quite a bit. I've long said, I mean, I remember people asking me about Tesla as a short at 30. And I've long said, it's one thing to bet on Elon Musk, but it's another thing to bet against him. I mean, the guy specializes in pulling rabbits out of the hat. Now, back at $30 a share, I did have a more, I guess, Pollyannish view of how he pulls those rabbits out of the hat. I do think that he's a fundamentally dishonest person. I mean, he's a liar. And it's sad. It sucks because he's done some incredible things. And I mean, when I watched the SpaceX launch, I want to root for this guy. I want to like this guy. And it just really bothers me that just the morally, there's no substance there morally. This guy would be a Hall of Fame human, right? I mean, one of the, people we would worship for, centuries. Why does he have to lie constantly? Why is he such a bad person? That's what bothers me. So, I'm not short the stock. I mean, it's thank God. We used to joke that Tesla, when it files for bankruptcy, it'll probably have a $30 billion market cap. I mean, it's probably much larger market cap than that when it files for bankruptcy. But I just don't see this business in any reasonable incarnation of it being able to really generate cash on a sustained basis. But yeah, I mean, short it at your own risk, man. I wouldn't do that.
Yeah, I'm sure Elon Musk would have something to say about the shorts, something even more to say about the shorts as well. We have a question from Steve Howe, who asked, was there ever any Chinese company that you suspected of fraud but later found to be honest and respectable? Do you see any hope of Chinese companies evolving towards more honest corporate management?
Well, so there are some Chinese companies that we looked at as potential longs, some years ago. And, certain people on my team were convinced that they were real, that the numbers were real. But here's the thing, the numbers were fairly unspectacular. I mean, they weren't growing at amazing clips. There were some tough periods. They were in somewhat commoditized industries. But that to me is the great lesson, is that I learned, from my experiences and as well as just watching innumerable others, that China is probably the toughest business environment in the world. I mean, has been for a long time, because the moment you are making outsized returns doing something, competition will flood in. I mean, there hasn't been a shortage of liquidity to fund businesses, in probably at least 20 years. So competition will come in and destroy you, and they drive margins straight down. And I used to joke about how it seemed like everybody in China had just a 6-month business plan and they were all just copying somebody else. And why don't they invest and really try to build brands? And then I did that, and I understood that you're actually, that's actually kind of the foolish thing to do in China. It's just, and if it's not private business people who are coming after you, it's the state-owned enterprises. And then it's government guys who are trying to shake you down. And just, it is so difficult. So lying these fairy tale kind of numbers, I mean, I think they're just that. They're fairy tales to varying degrees. I mean, the newer, the IPOs since 2012, 2013 tend to have more reality in the business than, I mean, most of them I would say are real companies with fake financials. Occasionally there's basically a fake company with fake financials too, but unlike the first wave, there's more reality in the businesses, but the financials, not.
Here's a question from Adam Midvidi. It's about position size and risk management, because theoretically someone could be short at Tesla, and 1 second it's 200, next second it's 1,800. A lot of risks when you're shorting. How do you think about position sizing and risk management from the short side?
So look, I'm going to give you somebody else's answer, because as an activist short, it's entirely different. But in general, I mean, the person I really, really respect in this space is Jim Chanos of Kinnikos. And so, and this just goes to illustrate, I think, how difficult the economics of a short selling book are, because the way that Kinnikos is generally sized positions, most things are usually 1% to 2% positions. And if they get to a 3%, then they have to start having meetings about it. And, I'll talk to people who say, we're starting up short funds, and they say, oh, no, we're going to be more concentrated, high conviction stuff, bigger positions. Yeah, I think most of the people who say that and do that eventually get carried out. I think really the only I think really the only way to stay in business as a short seller, non-activist short seller, is to have like 1 to 2, maybe 3% position sizes. But that means 70 to 80 names in the book. So 70 to 80 names at the bottom of your funnel. So you have to start with a much, much bigger top of the funnel to get down to 70 to 80 names. And I mean, how do you realistically do that without a decent sized, without a small army of analysts? I mean, you don't. So you really need to have AUM, real AUM in order to do that, to support the analysts through the management fees. Unfortunately, because short only guys have gotten just destroyed since 2009, there really isn't the AUM. I think there may be, my best reckoning on this is, I think there are 2 short dedicated funds in the world, or short, basically short biased, that have over $1 billion in AUM, or firms, I should say, that manage that money that have over $1 billion AUM. That's Kinnikos, and there's another one in California. So it is really, really tough. As a short activist, we can, because we control the timing of what we hope will catalyze revaluation, we can be a lot bigger. But we also tend to scale down our positions, especially as we feel like the short campaign has more or less run its course, whether successful or not successful. At some point, you get to a stage where you're like, okay, there's nothing additional we can say that's going to change people's minds. So it's not worth having a really big risky position.
We like to talk about accounting on the show, and we have a good accounting question from LA Banker. You mentioned earlier the new accounting standard ASC 606 exploitation as one example of a way that people can sort of legally fudge their financial statements. Do you have any other favorite accounting red flags that you look out for?
Sure. So, I mean, I think one of the biggest issues is when you see companies reporting a significant amount of their income in the form of net fair value gains. And then you look and see, well, what percentage of the assets and liabilities are level 3, because a high percentage of the gains coming from level 3 is a really big red flag. But even level 2 fair value can be greatly manipulated. A company that we shorted back in 2015 went bankrupt a couple of years later, called Noble Group, which was a large commodities trader based in Hong Kong, traded in Singapore. Account move value assets and liabilities, which, initially we said, gee, we can see how you manipulate level 3. We don't see how you can manipulate level 2. The short answer was they were doing coal, and so the coal futures, the coal forwards only go out, I don't know, maybe 5 years. And so what we think they were doing is, in years 6 through infinity, they were really playing around with the curve there. So it was technically level 2, but they were able to basically, make up the numbers. But fair value gains are a big, big flag.
I have a question. It's actually not one from the Twitter people, but it's something I've wondered about for a while. What's the deal with Canada? I mean, I was thinking about it because you mentioned how your one long position was a junior gold miner, but Canada seems like a pretty well-run country, stable government, sort of transparent system. But it seems like they just have tons of frauds, and their biggest companies have a history of imploding. And then they have that stock exchange out in Vancouver where there's all kinds of Wild West stuff. Do you spot opportunities in Canada? It kind of reminds me a little bit about some of the stuff in China, but I've never really been able to grasp my head on why things always implode there. And I'm curious if, as a short seller and a detector of fraud, you have a Canada theory.
Yeah, no, well, I'd say the first issue with Canada is that there's no federal securities regulator. So it's a balkanized system.
Part of it.
Yeah, so you've got these provincial regulators. And I've dealt with 2 provincial regulators. I've dealt with Ontario over Sino Forest, And I mean, at least back then, I had a lot of respect for them. They put a lot of resources into, like, they got it very quickly, and they put a lot of resources into it, and they managed to impose some accountability on the people there. Then I dealt with another provincial regulator with another company. I mean, they were just complete idiots. I mean, they were really, really, really unsophisticated people who just didn't get it. You've seen a couple of these provincial regulators, get smacked down on judicial review. I mean, that happened to British Columbia Securities Commission in its own administrative court when it took action against a guy named John Carnes, who was an activist short seller. And then the Alberta Securities Commission when it acted out against Mark Cohodes and tried to get an injunction to prohibit him from publishing further or tweeting further on a company, which, I mean, like, Mark's in America, and, only the most narrow circumstances would allow for a prior restraint to be enforceable in U.S. court. So I'm not really sure what the point of the ASC doing that was, but that got overturned, as I understand it, by Alberta courts. So I think that that's the fundamental problem: is you have this balkanized system. And most of them are just horrifically unsophisticated, and they just pander to the companies. That's one thing. And the other thing is, despite the huge land mass, population base is very small, so it's extremely clubby there. And we shorted Manulife back in the fall of 2018, and it was an atypical short thesis for us. It was basically an event-driven type of short. They were in a bet the firm litigation that they hadn't told anybody about, and they were in court at that moment. They had submitted. They had an expert submit an affidavit saying if they lost this case, then then they could go. They could fold. And they had refused to entertain real settlement offers with the plaintiff. We came out with our report, and within, I think, 2.5 weeks, the province that where the case was taking place, Alberta, changed its insurance law to outlaw the type of loophole that the plaintiff had found that he was suing under. So, I mean, it seems like the people from Manulife picked up the phone or got on a plane, went and met with the governor of Alberta, or the chief executive, and immediately had the law changed. I mean, I looked at that and I said, that's straight up Banana Republic kind of stuff. So I just wouldn't expect to ever see that in the U.S.
Well, since Joe brought up Canada, we should ask, are there any particular areas that you're focusing on right now? We saw you go after NMC in the United Arab Emirates. We've had the massive Wirecard fraud in Germany. Are there sort of new areas or countries that you're specifically focused on?
I mean, nothing at this point. Nothing new. I view our chessboard, so to speak, as UK, potentially other Western European countries, but we've been through the ringer in France and Germany, so they don't really, roll out the red carpet. Singapore, Hong Kong, Japan, US, Canada, obviously, and possibly Australia. Those are, I think, the countries where there's enough liquidity, there's borrow, there are functional legal systems, although, again, you might have to remove Germany anyway from that equation. France, at the end of the day, was functional. But that's really our chessboard, and we're looking at stuff, all the time in these different markets.
All right. Well, Carson, we're pushing up against our time limit for this event. So Joe and I would like to thank you so much for spending an hour with us, and we've gotten really good feedback on Twitter already. So thank you so much. That was a really great discussion.
Was that from the hacked accounts or the real ones?
Yeah, the real ones hated it, but the hacked ones liked it. So
we're good.
Cool. All right. Thanks, guys.
Thanks, Carson. That was awesome.
All
Really
right.
appreciate that.
Thanks,
Cheers.
Carson.
Take care.
Cheers. All right. Well, Joe, I really enjoyed that conversation. It's always great to talk to Carson. His thoughts on weeding out. Legal frauds, I think, are really important at the moment. Not everything is going to be the next Wirecard or the next NMC. And in fact, what you see the most are people just fudging their numbers through legally available accounting methods.
I love that. I feel like every short seller, I'm not going to say anything. They have to be different somehow. Like, I feel like if you're a short seller, it's so difficult. It's so trying. Most stocks don't go up, but it's so easy to lose money on the short side. It's unpopular. People hate you. You have to be wired a little bit differently. And so it's always fun to talk. We should do a short selling series. Let's no, seriously. Like, why not? Like, we should do like 5 in a row or something like that. Because I just feel like they're always just super interesting no matter what. And he was definitely one of them.
Yeah. But I feel like on that note, the idea of short sellers being wired a little differently, like they're true odd lots in a sense. Like this series is almost for people that have contrarian opinions. So we should do that for sure.
Okay. Yeah, and like also right now, because probably a lot of them thought this was the moment where they were going to like cash in on a lot of shorts. So yeah, let's definitely start getting more of those on the books.
Okay. All right. Well, we're going to wrap it up now. Thank you to everyone who attended this live event. We do hope to do more in the future. Obviously, we hope to do live events in person once things normalize, but we'll see when that happens, right, Joe? Yeah,
that's
one
right.
day we can dream. All right. This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me on Twitter at Tracy Alloway.
I'm Joe Weisenthal. Follow me at The Stalwart. And follow our producer who put this together, Laura Carlson, at Laura M. Carlson. Follow the Bloomberg head of podcast, Francesca Levy, at Francesca Today. And check out all of our podcasts under the handle @podcasts. Thanks for watching and thanks for listening.